Risk is a very important issue when it comes to Forex trading. I'm going to explain to you why. It's probably not so much of an issue if you're a longer time frame trader, say on the weekly or the monthly chart. But if you're a day trader, then this is certainly an issue. Trust me on this. Now, I really don't care what your risk percentage is per trade, as that's entirely up to you as an individual and as a trader. I have suggested 2 to 5%, which is quite common amongst successful traders. However, I am aware of even more successful traders that use slightly more. This will ensure that you stay in the game for longer. If you want to risk 10% on a trade, that's entirely up to you, but your longevity within this market is probably going to be a lot less. One thing I will say is it is very much within your interest to have a physical stop loss in place for every trade. This is a cut-off point where you'll be taken out of a trade if something does go wrong or the trade moves against you. It basically caps our losses and stops us from going too far into the negative. So what can go wrong? Other than picking the wrong direction for a trade every now and then, you may also have internet problems, or the biggie. Unfavorable news comes out that completely catches you by surprise, and before you know it, you're 100 pips in the negative. First up, there are potential internet problems. Now, it doesn't matter where you live or what internet provider you use, you could never be guaranteed 100% reliable internet, especially if you live in a rural location like I have for most of my life. One thing I would recommend is that you have your broker's phone number to hand, so you can phone them directly to close trades or move stop losses if this does happen. Potentially the biggest issue for traders is news releases, and more importantly, unexpected news, because Forex moves with the news, and there is always plenty of news coming out. The good thing about this is that most of the news which is released comes out at set times, which is very easy to keep track of. And I'll go into this a little bit further, a little bit later on in this series. So what am I saying here? Make sure you use stops on all of your trades. Now, I can't be any clearer on this. Now, the stop depends on you, but please don't make it a mental stop. These just don't work in Forex. To give you an idea of price movement in a 24-hour period, I believe the average for the euro against the US dollar is around 100 pips, and the Great British Pound against the US dollar is around about 120 pips per day. So that's just an average of a move within the market within 24 hours. When I say move, it may start and finish at the same price. So what I'm referring to here is a possible range of movement. If you were trading one standard lot and the market moved 100 pips against you, then you would be $1,000 in the red, which is obviously not good. If you're not sure what a stop loss is, it's in order to close your trade off automatically if the trade goes against you by a predetermined amount. Let's have a look at an example. So say I bought the euro against the US dollar at 1.3950, obviously wanting it to increase in price to profit. So I decide I don't want to risk more than 30 pips on this trade for whatever reason. So I'll tell you what I'll do, I'll set my stop loss in place at 1.3920. If the price fell to this level, your trade would automatically close out at a maximum loss of 30 pips. Now, this wouldn't matter if you were online, at the beach, or playing tennis, because it all happens automatically. So using a stop loss is a simple part of the whole Forex trading experience, but I cannot stress to you enough just how important it is. They are easy to place at the start of a trade, and even easier to adjust when the trade is running. So look guys, I strongly suggest that you use them at all times, simply to avoid the unexpected. Having said all of that, there are certain strategies that don't actually use stops. However, they normally have some sort of mechanism built in to assist you with trade management when the trade goes against you. For now, just place a stop on all of your trades, and then look at some more exotic trading methods sometime in the future. If you want instant access to plenty more free content, head over to our website and subscribe to our channel.